Hi everyone, welcome back to my channel. So today this was third video about banking awareness section. So in this video we will discuss two more chapters for this banking awareness section. So let's get started. So our first chapter was for today video Negotiable Instrument Act and cheques. We will discuss about these instruments and also cheques. So what are the different types of cheques and what was that purpose of the particular cheques? So all these things we will discuss in this video, guys. So the first one was negotiable instrument. In India, Negotiable Instrument Act was passed during the 1881, which came into force March 1, 1882. So in 1881 year, the Negotiable Instrument Act was passed, and after that it came into force March 1, 1882. So this is very important. So what is this? The Negotiable Instrument Act was passed on 1st 1881 and then come into force 1st March 1882. So in this, so what was the, so in this, based on this, so next, what was the cheque? What was the definition of cheque? So this means a cheque is a bill of exchange or drawn on a specified bank, not expressed to be a payable otherwise than on demand. It includes electronic image or a truncated cheque and also electronic cheque. So what was the definition of cheque? A cheque is a, first one is a bill of exchange and drawn on a specified bank and also not expressed to be payable otherwise than on demand. It includes electronic image of a truncated cheque and also electronic cheque. So this was the definition of cheque. Next one was amount of cheques. So where the amount of cheque differs in words and also figures, as per the section 18, amount written in words should be paid irrespective of the fact which amount is less or more. So what was the amount of the cheque? Where amount of cheque is differs in words and figures, as per the section 18, amount written in words should be paid irrespective of the fact which amount is less or more. So once again, in India, the Negotiable Instrument Act was passed during the 1881. So what was that? In India, the Negotiable Instrument Act was passed in 1881 and came into force 1st March 1882. And then next, what was the cheque? A cheque is a bill of exchange or drawn on a specified bank, not expressed to be a payable otherwise than on demand. So this is the definition of cheque. And next one was amount of a cheque, where amount of a cheque differs in words and the figures as per the section 18. So in these cheques, there are many types of cheques. We will say about what are the different types of cheques. So the first one was bearer cheque or open cheque. So this is very important. So the first one was bearer cheque, or it is also called open cheque. So in this, when the words or bearer appearing on the face of the cheque, it means the word or bearer is appearing on the face of the cheque are not cancelled. For suppose this is a cheque, and in this, when the words or bearer appearing on the face of the cheque are not cancelled. So, or bearer appearing on the cheque was not cancelled. It means it was not cancelled. So this cheque is called as a bearer cheque or open cheque. So the bearer cheque is payable to the person specified therein or to any other else who presents it to the bank for the payment. So what was the bearer cheque or open cheque? If there is a cheque, so in this cheque the word or bearer appearing on the face of the cheque is not cancelled. If the or bearer appearing on the face of the cheque are not cancelled, so the cheque was called as bearer cheque or open cheque. So the next one was order cheque. So what was the definition of order cheque? When the word bearer appearing on the face of the cheque is cancelled. So if the or bearing is not cancelled, then the name of the cheque was bearer cheque or open cheque. If the name of the bearer was cancelled, so the name of the cheque was order cheque. Only two differences. So what was the bearer cheque and open cheque means? the or bearer appearing on the face of the check are not cancelled. So that check is called bearer check or open check. But in case in order check, the word bearer appearing on the face of the check was cancelled, which in its place the word order is written. So in the face of the check is called as a order check. In place of the bearer, it's cancelled. In place of the bearer, the word or order is written on the face of the check. So that check was called as the order check. Next one was crossed check. So what was the meaning of crossed check? Crossing of a check means drawing two parallel lines on the face of a check with or without additional words like CO or account payer or not negotiable. So this check was called as a crossed check. So once again, what was the crossed check? A crossed check means drawing two parallel lines. So this is the check. Drawing these two parallel lines on the face of the check with or without additional words like CO or account payer or not negotiable. This cross check cannot be encashed at the cash counter of a bank, but it can only be credited to the payee account. And the next one was antedated check. So if a check bears a date earlier than the date which is presented to the bank, if the bank is suppose fixed, so 24 August 2022. So this was the bank presented date. So what was the antedated check? If a check bears a date earlier than the date, it means 23rd, 22, 21. So earlier than 24th date. So this check is called as the antedated check. So the next one was post-dated check. So this is reverse of antedated check. If a check is bears a date which is at the future, then it is known as a post-dated check. It cannot be honored earlier than the date on the check. And next one was stale check. If a check is presented for the payment after 3 months from the date of the check, so if the particular date is on the given check, so this check was presented payment after the 3 months of the date of the check is called stale check. So after the 3 months from the date of the check is called as a stale check. The stale check is not honored by the bank. And the next one was self check. It is written by the amount holder as a pay itself or to receive the money in the physical form from the branch where he holds his account. What was the self check? It is written by the account holder as a pay self to receive the money in the physical form from the bank. Next one was truncated check. So it means check which is truncated during the course of clearing cycle, either by clearing house or by bank, whether paying or receiving payment or immediately on the generation of an electronic image or transactions. So this expression of clearing house means clearing the house managed by the RBI Act or clearing house recognized such as by the RBI. So these are the most important checks asked in our mains examinations. Overall there are 8 checks. So the first one was Negotiable Instrument Act was passed during 1881. After that it came into first 1882. And next, what was the meaning of the check? A check is called as a bill of exchange drawn on a specified bank and also not expressed to be payable otherwise than on demand. Next, amount of a check is where the amount of a check differs in words and the figures. Next one was what are the different types of check? It's bearer check or open check means if the check of the word or bearer on the face of the check is not cancelled, so the check is called as the bearer check or open check. And the next one was order check. So in this place bearer is cancelled and in the place of the bearer order was placed, so that's why order check. And next one was the crossed check. So two parallel lines, crossing a check means drawing two parallel lines on the face of the check, so this is called crossed check. And the antedated check means if particular date given, it means presented by the bank is earlier than this check, this was antedated check. And post dated check means after the 3 months, it means future date, this is first dated check. And stale check means after the 3 months from the date of the check is called stale check. And self check was it was written by the account holder as pay self to receive the money from the physical form, and a truncated check is the check which is truncated during the course of a clearing cycle. So these are the 8 different checks. And next we go to the parties of a check. So in check drawer, it's also called maker, and the bank and the payee. So these 3 are the important parties participated in our check section. So the first drawer, it's also called maker, and the bank to whom check is drawn, and the payee is the person whose name is mentioned on the check and whom or to whose order the money is directed to paid. So these are the parties of checks. And next one was endorsement. What was the endorsement? As per the section 15, endorsement means signing on the face of backside of an instrument for the purpose of negotiating a negotiable instrument. What was the endorsement? As per the section 15, endorsing means signing on the face or backside of an instrument. So this is called endorsement. So endorsement full means if the endorsement signs his name adds a direction. So this is endorsement full. And restrictive endorsement means prohibits and restricts some of the limitations. So this is called restrictive endorsement. Next one was a brief on crossing check. So what was the brief detailed explanation for this crossing check? Crossing check means 2 parallel transverse lines on the face with or without words. So this is called crossing check. So crossing check is applicable in case of checks and demand draft. So these are the checks about their parties. Next, what are the types of crossing? So this is roughly information. General crossing 123 means where check bears across 2 pairs of transverse lines. 124 means face name of the bank without the words. So this is a rough idea, and directly we will go to the next one. So that was demand drafts. So what are the demand drafts? Demand draft is defined as per the section 85A and Act 1881. In order to pay money drawn by one office of a bank to another office of a bank, sum of money payable in order to demand. So what are the demand drafts? Demand draft is defined as per the section 85A Act 1881. In order to pay money drawn by one office of a bank upon to another office of the same bank. So it means, for suppose SBI in 2 offices, so same SBI bank, so one office at one of the location and another office at another location. So in this demand draft is how we will define: in order to pay money drawn by one office from bank upon to another office from the same bank. So this is called demand drafts. It is payable order demand, and it can be issued by the payable or bearer. Okay. Next one was financial inclusion and initiatives launched by it. So this was also very important. Financial inclusion involves give formal banking services to poor people in urban and rural areas, and promote habit of money saving, insurance, pension, investment among poor people, and help them get loans reasonable rates from normal banks, so they don't become the victims in the hands of money lender. So for suppose nowadays a lot of people are suffering about this borrowing of money from money lender. So we will eradicate this through these financial inclusion and initiatives. So these achievements are give formal banking services to poor people in urban and rural areas. Those who are living in urban and rural areas, for those people will give formal banking services first, and next promote habit of, and we will encourage and empower them through money savings, insurance, pensions, and investment among poor people. And third one was help them get loans reasonable rates in the normal banks. So these are the achievements of introduced by the financial inclusion. The first one was give formal banking services to poor people in urban and rural areas. Next one was promote habit of money savings, insurance, benefit, and investment among poor people, and help them get loans in reasonable rates at normal banks. So some important initiatives for this financial inclusion was lead banking scheme, no frills account, basic saving and bank deposit account, business correspondence system, Swabhimana campaign, Pradhana Mantri Jan Dhan Yojana. So these are the financial inclusion initiatives. The first one was lead banking system, no frills account, BSPDA, business correspondence system, Swabhiman campaign, and Pradhana Mantri Jan Dhan Yojana. So the first we will go to the lead banking system. So in this lead bank system introduced towards end of the year 1969, okay, and envisages assignment of lead roles of individual banks. And next, a bank can relatively large network branches in rural areas of the given district entrusted with the lead responsibility accordingly. The lead bank leader for coordinating efforts of all critically allotted districts. So this is the lead bank scheme. It's envisages in 1969 of lead roles of individual banks in public and private sector of districts allotted them. And no frills account means no frills account is a basic saving account. Such account requires either nil minimum balance or very low minimum balance. Charges applicable such accounts are low. The RBI 2015 and 16 is called upon Indian banks to design for the frills account. Okay, so this is for financial inclusion initiatives. And maintenance account in the specified know your customer norms, but all the existing no frills accounts opened were converted into BSVDA compliance with the guidelines. And next, basic saving and basic deposit bank deposit account. So this is introduced by the 2012. Some important points are: this account shall not have the required of minimum balance. So along with this, the service available in the account will include deposit, withdrawal of cash, bank branch as well as ATMs. Okay, and next, there will be no limit of number of deposit and can be made in a month. Account holders will be holding maximum 4 withdrawals in a month, including ATM withdrawal. And next one was BCs. BCs are bank representatives. They personally go to home allotted to them, go to the area allotted to them, carry out banking. They help villagers to open the bank accounts in banking transactions, etc. And business correspondence means get commission from bank every new account opened, every transaction made them, every loan application processed, etc. So these are the inclusions. And next one was all about priority sector lending norms. So what are the priority sector lending norms? Agriculture, education, export, social infrastructure, micro small art, housing section, renewable energy. Okay, and the next one was MSMEs. So this is also important topic. So in tomorrow we will cover MSMEs and financial markets, and also other money market instruments. Okay, this video, it means I will end this video, guys. So thank you for watching this video. And once again, so those who are appeared in today's exam, please share your attempts and your paper reviews in our comment section. So thank you for watching this video, guys. Thank you.